everybody for coming today, and I want to thank our panel for showing up today. They've been very helpful getting this organized, and they've had to take some time out of their busy schedules, and I'm sure they're disappointed today with the 90-degree weather, not being out there banging on doors and running to banks and whatever else that realtors do and bankers do. I'm sure that they're appreciating this cool air. And I also like to take a minute to also give special thanks to two of our MWR employees who's helped me out tremendously the last couple of days. One who's still downstairs waiting for one of our guest speakers, and that would be Judy, and then Deb Key, you all are familiar with. She came in yesterday and said, okay, let's do a sanity check, and I told her it was too late, my sanity was gone, but thankfully she stepped in, and they actually are the ones that set everything up this morning, so a special thanks to both of them. As I said, one of our guest speakers, he's tied up in a meeting over, I think it's Kalamazoo or Grand Rapids, I don't remember which he said, but he's going to try to make it here. But we have a contingency plan so we can cover what his questions were today. So you're not going to lose any valuable information. So again, thank you. Before we get started, I do have some valuable administrative notes we have to cover. If you have a cell phone, please turn it off. We are videotaping this, so please, if you have questions, keep them generic or hypothetical, because I'd like to post this to my website for other people to be able to view later on. And at 12:30, there's another meeting scheduled in here, so we will have to be sure we're out of here by 12:30. So I'm going to start this out with, I'm going to ask questions of them that I have here. If you think of questions that you'd like to ask, please write them down and we'll have a question answer at the end. There's paper available over on the table, and there's pens available if you'd like to use those to write your questions down with. See if I got all my administrative notes done. All right, let's move on. I'd like to introduce you to the panel. We'll start from the far end, and that is Ms. Yvonne Powell. She is over at Neighborhood Inc. across the road of Battle Creek. And she was kind of a spur of the moment ask because she was out of town when I was organizing all of this, so I really give her a special thank. And I would also like to say I picked the hottest day of the year for her to walk over here, so she's sitting here trying to cool down a little bit, so thank you, Yvonne, for showing up. Ms. Renee Underwood from Independent Bank, and Mr. Ron Burris from Pierce Realty. He is the broker and owner. And then we all know the next one, Mrs. Bonnie Wiedmeyer from Pierce Realty, former HDI Federal Center employee. We all aspire to be her retired. Mr. Greg Camerod is the one that is on his way over here as we speak. And then Mr. B.J. Etheridge from Prudential Realtors. And then Mr. Paul Ressler, manager of Prudential Realty here in town. So thank you to all of them for attending and taking the time out of their busy schedules to come today. In today's financial culture that we have going on right now, we've all had a lot of questions about foreclosures. We've all known somebody, or we are probably one step from foreclosure ourselves maybe, or there's all sorts of things going on out there. We've seen businesses closing, we've seen families that end up homeless because of this. It's generating a lot of interest. People are also interested in buying foreclosures because obviously the market, the prices have gone down in housing. So I thought it was time to pull this together and let's have some honest question and answer feedback and find out what to do about foreclosure so that we can prevent problems down the road for maybe our families and our friends, or even ourselves in that case. The guide that I'd like to give is I'd like to present my questions to them and then have them answer them, and then if any of the speakers find that they have more information, they will give the option, given the option to respond to that so that they can answer or provide more information as they know it or as they're experiencing in their field. So we'll leave it open for them at this time, but we will leave time at the end for answers and questions. What I'd like to do is take your questions if we don't have time at the end to answer them all, is have you please provide the questions in writing to myself or Debbie, and what we'll do is do a fact sheet. We'll get the answers from the speakers, and then we'll post it to our website so that you can look at it later, and then I'll advertise it when it's posted. The speakers have asked me to give a disclaimer, and I'll read this so that it's clear for all of us. The panel members are not tax accountants nor attorneys, and the information that's given out in the areas of taxes or legal should be obtained from professional tax accountants and legal professionals. These are realtors and bankers, and this, what we're going to stick with is in their professional arena. Okay, unless anybody has anything, let's move on. And the first question I have is to Greg. We hear so much about foreclosures that are going on, and we know the ultimate impact to many families and businesses. What caused the housing market to fall significantly, and what are the outreaching impacts? Was it job loss and resulting loss of income, bad loans, bad loan choices, or others? Can you please explain for us? Oh, I'm sorry, and I said I couldn't.
Really do that.
Well,
we can address that. Right?
You want to address that? Okay, go ahead then. Thank you.
I think it's a combination of a lot of things. Fortunately, in Battle Creek, one of the things that we didn't experience as much as California, Florida, some of those places, you didn't buy a house for $500,000, 2 years later sell it for $750,000, 2 years later sell it for $1 million, and 2 years later it's worth $450,000. We didn't have that bubble experience here that they had in the rest of the country, which was kind of fortunate for us. But unfortunately, economics, job losses in the area, as you well know, our unemployment rate ranks as one of the top cities in the state. That's hurt us significantly, and of course, supply and demand. We have a lot of houses on the market, and the jobs are leaving us, so that's also hurt us. But also, and I'll let you address it, but when you lend money at 125% loan to value, you get in trouble. When you take second mortgages out and your house is appraised at the time for 25% more than it's worth, and then the bottom falls out, that causes a lot of trouble. And of course, I'll leave it to the variable rate, and I'll let the banker tell us about that.
Well, there's differences between different industry as far as brokers and things, and then what's allowed in the policies and procedures that are followed. So,
could you speak closer to the mic, please?
Sorry. I'm trying to talk louder. The 125% loans definitely, I think, got us in trouble. The adjustable rate mortgages, without people having full disclosure or understanding exactly how those worked and how they could impact their payments and the rates as time went on, and maybe not understanding how those work, I think those set some people up for later difficulty down the road. So there, I do believe that it was a lot of components working all together. I think education, not being fully educated about exactly what it was that people were getting themselves involved in, or clear understanding and full disclosure, I think, are all a piece of that. I do think that well, I think that sometimes we try very hard to try to make all of the rules apply to everybody. One of the things that happened was that when people had high FICO scores, they allowed them to borrow money without verifying that they could afford the house that they were buying. And I think that played a big role in it as well. You might know them as stated income products or no income, no asset documentation loans. And a lot of our brokerage companies and banks and financial institutions were lending money without verifying that the people could financially afford them, and the borrowers were saying that they could, and we were going with the notion that they would make the payments and be able to pay the loans. And so some of those components really caused some problems that we're dealing with today.
Yes, sir. If you could write your questions down and hold them to the end, We'd like to get through all of our questions first, and then we'll address your questions at that time, if you don't mind.
Testing?
That,
Testing, can you hear me? Compared to market, let's say 20, 25 years ago, a lot of people may remember back when interest rates were 17% on mortgages. I know a lot of us do that. Where that actually impacted people who were buying houses. What happened in the last couple of years, which is an interesting correlation, and that is the fact of $4 gasoline. That affected everyone, not just people who were buying homes and so forth. And it's an interesting correlation. Back in the late 70s when gasoline was $1 a gallon or something, everybody choked. Same effect now, only it certainly reverberates a lot louder. So I see the cost of things actually affecting it as well, not just housing market. In other words, people are actually walking away from their homes, not that they can't afford to make payments, but if they don't, they won't be able to make a payment on their snowmobile.
on something else.
Issues and stuff. And those folks that perhaps, as Renee was talking about, perhaps were borderline in regards to their priorities, getting into homes with very little or nothing down in many cases, maybe were more tenant-minded than they were owner-minded. And so you see that issue coming to fruition right now. But truly, $4 a gallon of gasoline, you watched Columbia Avenue, and there was hardly anybody going up and down in the mall. And if you remember pumping it for $80 to fill your gas tank, everybody living on credit cards, no cash, I think that was kind of the forerunner of a lot of what we're seeing right now. So,
More or less like it was the last straw.
yeah.
Is that what you're
That's
thinking?
what it was. I think that's what kind of started the whole issue with the auto industry and everything. So it certainly had an effect.
Would anybody else like to speak to that?
Okay. I think we'd all be surprised, you all would be surprised to know that there's a large group of people out there who were making good incomes and went out and bought their dream home and tried to rent out their other home, which they might have done for a while, or tried to sell it and it didn't sell. And so these people who had excellent credit and were good employees and everything else, they just decided that since there's so many foreclosures going on already, that they would just go ahead and let their other house go into foreclosure anyway, because after all, it might not affect their credit for 2 to 5 years, and they already have their dream home and they're in it, So that has happened a lot, and my personal opinion is that's kind of dishonest, but that doesn't matter.
Anyone else? Okay, thank you. We'll go to the next question. Ron, what happened to my mic? Ron, what are you seeing in Battle Creek as far as foreclosures? Are you seeing significant numbers in homes and businesses foreclosed? What seems to be the cause, and is it based on a certain income level? What seems to be the trend?
Yeah.
And for this, you have a slide, right?
I do. Yeah, if you could
Deb, if you could bring the slide up, please.
put up there. In the things that you've picked up in our folders and stuff, I do have a copy of this. And the city assessor we had at our office about 3-4 weeks ago, and it was very nice to have him talk. But he also had a very large map, and it's behind me at the moment, and that is in your handouts and so forth. And what that represents, 2008, the city of Battle Creek in regards to foreclosures. And the very small colored print on the back side over here, which you really can't see, actually represents the percentages in those areas. And again, this is the assessor's information that he was more than glad to let me share with you today. It shows a map that centrally located here, where the orange and dark orange properties are, actually shows the higher rate of foreclosures, and this is in 2008. There are very small numbers that are next to, or a little out of focus here, that actually has the number of foreclosures in that area. So, the map kind of shows where the numbers were, the higher numbers in the orange, the lighter numbers in the purple. The blue being about 1% of the whole area had foreclosures, and the dark or the burnt orange close to between 4 and 5% of the homes in that area. This is for the year of 2008. a fairly significant number, I would say, and you can see basically where the higher concentration numbers are. What I
Ron, before you
Yes,
go on, can
sure.
you kind of help us identify where this is?
Sure.
I'm not sure myself what the locations are here.
Sure. Okay. This area right in here would be the downtown central area. Okay. This is right here is 66 as it comes into town. Where we're at right now would be somewhere right in here.
Okay, that's great. Thank you.
Okay. Fairly self-explanatory, and I apologize for the small numbers in your handout, but again, the dark orange colors in your map represent somewhere in that 4 to 5% in the neighborhood, in that area. And there are some small numbers that go along with that next to it. What I see in regards to foreclosures in Battle Creek is, I think, what some of the panel members have already touched on, and that there is no, many times loss of job and so forth has no difference in regards to income. Somebody loses their job if they are relying on two-income families, which Renee could tell you that's probably 85 to 90% of the folks who own homes are using two incomes, and so if there's a loss of one of those incomes, it really puts things into a tailspin. So we see a lot of that. We also see what we'd already touched on is that people, they have two homes and they just walk away from one. We actually had somebody stop into our office here about 6 months ago and wanted to turn the keys back. They thought that's how they would give the house back. And they came to the realtor and gave the keys back. Forget about the lender who actually has a mortgage on it. So there is a certain aptitude in some cases, and these are the folks that perhaps that you've read about of predatory lending where they are really taken advantage of in regards to these issues. And that's why I think it's really important to have a competent lender and realtor to help you through that process, and that's unfortunately the case many times. Trends, I see probably what I've been seeing personally is there's been a bit of a flat leveling of values and foreclosures here maybe for a month or two. I think there's been a big spike in activity, and I think Paul and BJ would probably agree with that. And that probably directly related to seasonal issues, interest rates being very good. I don't see anything changing with interest rates. In fact, I think the Feds are meeting today about that, and I believe they'll probably stay about the same. That's a good thing. Back in 1979, interest rates were 17%. Incredible, we were selling houses at 17%. People just said if that's the way it's going to be, that's the way it's going to be. And so the interest rates are in that 5% range right now. That's very good. There's issues that are helping us, and that's the latest in regards to the tax credit, 10% up to $8,000 of tax credits. So the government's trying. And originally, back when the monies were being allocated way back when, that's really what it was all about, was the housing industry. And I've always felt that the housing industry is probably the lead economic indicator, as you hear all the time, because when somebody buys a house, they buy a washer, they buy some carpet, they buy appliances, and so forth, and that certainly helps the market and the economy run. So that's why I'm sure the government is very concerned about it. I'm glad they are. I'm a homeowner myself, and that's important. When it comes to values, there's no question the inventory that's large right now tends to affect values. We all know that if you have a house that's next to you that's a foreclosed property, and the bank is not really excited about being homeowners, they would like to sell it, and many times they'll sell it for less than perhaps you think your house is worth, which is an identical house. That causes a major problem. So the trend is there. In your handouts also, I put something in regards to this, some quick investigation in regards to values, average selling price, that is, not values, but average selling price since the year 2000 for the first 6 months of each one of those years. And you can see the average sale price, how it's been affected or not affected. I thought it was interesting right after 9/11, there wasn't really much of an effect on that. I thought it was encouraging, very good. But in the last couple of years, it's dropped considerably down to an average of somewhere in that less than $80,000 average sale price. That's a good thing if you're buying a house. It's a great thing if you're buying a house. If you're trying to sell your house and you're marrying John Smith and you're competing with a HUD property across the street, that's not so good. And so The flip side of that is if you're going to sell your house and you want to buy another one, then you're going to make up the difference when you buy because the prices are low. So if you're going to sell low, theoretically you're going to be able to buy low too. So good market in that respect. So I see the trend pretty much kind of staying that way. I think there's probably going to be perhaps another surge of properties coming on the market for the ARMs, the adjustable rate mortgages that perhaps could be coming up. And so we're all kind of bracing for that. That can be a good thing and a bad thing. That might spur on some more investors who've been very busy in the last couple of years. We'll bring prices back down a little bit for those folks who are right on the edge of whether they would like to buy their first home, which comes in with that tax credit of $8,000. One of the things I think that a lot of people don't realize is that a tax credit really means money. I think if it was called something else, people would probably take more advantage of it. I think they're not quite sure what that means, especially first-time home buyers. But literally, it's cash. It offsets your tax liabilities, and you get the difference. So it's a good thing. And so lots of things to be watching. I think it's going to be a fairly good market in regards to the numbers. And if you see what I've down here, the numbers of sales are not necessarily less. The value of the property is less. Okay?
Thank you.
Yeah.
Okay, let's move on to the next one because some of your comments kind of lead into Paul's question. What types of sales seem to be the most popular at this time? First-time buyers, foreclosures, leaving the area due to the economy, or other trends?
I think there's a couple of them. Number one, first-time buyers right now, I see a trend right now from 100 to 160,000. There's a spike in purchases. I believe part of that is due to first-time buyers. And I want to educate you a little bit about a first-time buyer. If you have not owned a home in 3 years, you are considered a first-time buyer. So that's good information to know. So if you have a son, a daughter, a grandson, or you haven't been on a loan with a spouse in 3 years, you are eligible for the $8,000. It's not $8,000. It's 10% of the purchase price up to $80,000, which would give you the $8,000. So I just wanted to tell you a little bit about that. But I think because of that stimulus package, we've seen first-time buyers buying in that 100 to 160, and at 100 to 160, because of the market, they're getting a lot more house for $150,000 than they could have 5 years ago. Maybe up to 25-30% less than they would have paid 5 years ago. So that's one of the trends. The other trend, I think, is foreclosures are continuing to go up. Bank foreclosures, there's a couple of things I would caution you about on a bank foreclosed property, and BJ has a handout that spells some of these things out. Please take one. But it's not just job losses. I say that we have a high unemployment rate, but we have also, in Battle Creek, unlike a lot of areas, we have a high underemployment rate. If you go out to the industrial park on a Friday, you don't see many cars parked out there because they're on 28 and 32-hour work weeks, which has also caused them to not be able to meet their financial obligations and their home go into foreclosure. One of the things that I would say is, you can always look at the glass half full or half empty. If you're looking at losing your home to a foreclosure, by all means, see somebody right away. The worst thing that could possibly happen is that you spend your life savings trying to hold on to this home, and you're just prolonging something that's inevitable. A year from now your $40,000 or $30,000 in savings is gone, and you're still going to lose that home. So talk to a realtor, talk to somebody, a financial advisor, and get good advice on what you should do. On the flip side of that, it gives an opportunity for investors to purchase. A great opportunity right now for purchasers. It's never been a better time, and Ron had indicated back in the early 80s, late 70s, early 80s, that the housing market was very soft as it is now. But they were talking 17% interest. Now you have the housing market as soft as it's been in decades. You have interest rates as low as it's been in decades. There's never been a better time to buy a home than right now. And there's some phenomenal buys. The only caution I would say, we are seeing a trend of a lot of bank-owned properties that were bought by investors and have gone bad again because they purchased a home thinking that they were handymen, got into it, It was bigger than they had anticipated. It was a money pit, and that went back to the bank also. I recommend, and I'll let the banker tell you, if you're going to buy a second home, don't take a loan out on it. If you have to take a loan to buy that, even if it's rental property, I recommend personally that you don't do it. But we have excellent people. One of the things that we have in our office is HUD, which is all HUD houses are failed, FHA guaranteed, Federal Housing Administration guaranteed. We are one of 2 offices in Battle Creek that have all the HUD contracts, so the listings go through us. Don't go on a website and pay somebody to search or give you HUD homes that are in foreclosure, because you can go to mcbria.com and find it. You can go to PPRMI, which is Prudential website, and find it. And so don't pay someone to do that. Contact a realtor. Go on our website or contact Trina. She has access to that.
Thank you, and that leads right into Renee's question. Can foreclosures be avoided, and how, and who should folks contact for assistance? Obviously, Paul's already said the bankers and the realtors, but if you could elaborate.
Absolutely, and foreclosures can absolutely be avoided. A lot of it is taking some ownership of it yourself if you're struggling, or as mentioned, the amount of hours that you're working, or I know people are taking pay cuts to keep their jobs. Work with the lender that has your loan. Let them know your situation. I think you need to know where you stand prior to even going and talking with them. Look at your budget, see what you have in your budget. You need to know what all of the things are that you can't not have, whether it's medical insurance or prescriptions. And then there's the things that we all love to have that maybe we don't need right now if it's going to help us get us through that hard time. We all want to keep our cable, and we all want to keep all of the things that we have, and maybe sometimes those are the things that we have to look at as to whether or not we can let those go. If you get to the point where these are the things that I have to have and I can still make my payments, if I let these other things go, you need to go to your lender and say, okay, this is where I'm at. I'm struggling a little bit, but if you can work with me and understand where I'm coming from, this is what I'm willing to give up so that I can do these things, and understanding that you're putting your budget, in the right priorities. I also think that if that's not the case, if you have whittled away everything that you can, like you said, and you're going to take out all of your money for 401k and all of your life savings, and you're not going to get farther ahead, that's still a conversation you need to have with your bank, and potentially look at what kinds of options you might have in order to allow that house not to go into foreclosure, but to be able to sell that house. And maybe downsize or do something differently. It is interesting when we sit across the table from somebody and they want us to forgive, large amounts of their mortgage, but they're not willing to give up anything either. That doesn't typically happen. So we've got to, come to a happy medium. So I would say, first of all, go and talk to, first find out where you stand, and then go and talk to your lender and see where you're at. There's a lot of different organizations that can help you as well, and some people aren't budget savvy and they need help with that as also. There's a Community Advantage does Budget Smart. Neighborhoods can help you with that as well. Your bankers, we typically don't get incredibly involved in that, but we have recently helped people sit down and figure out their budget to see what they can cut in order to make it work. So put some numbers together and kind of see what you can come up with and where you're at. It takes 9 months typically for a house to hit the market. So he was talking about potentially seeing more houses come on the market, and that's why is that the houses where people have been struggling and the banks don't actually own them to the point that they can put them back on the market, you're going to see groups of those coming on the market. I want to talk about ARM rates just briefly. There's been a lot of talking about ARM rates, and that's an adjustable rate mortgage, which means your payments and your rate adjust based on what's going on in the market. Not all of those are scary. I have customers right now that had adjustable rate mortgages that were 5-1 ARMs, that their rates are under 3%. because their rates adjusted down based on the market. So I say that to encourage you to read your information. Foreclosures being avoided for people who are purchasing houses, and how we make sure that that doesn't happen and we don't keep continuing this trend is making sure that you read and understand the information. Know that every lender that you work with, if you're purchasing a house, has to provide to you a package for closing 24 to 48 hours in advance. They call it an attorney package. You can have it reviewed by an attorney. You can have some of the lenders are also very realtors are also very savvy when it comes to that. If you didn't feel comfortable hiring an attorney to review it, but you can sit down and look through the package and read it and make sure. I know a lot of times you'll go to a loan closing, people just sign it all away and don't understand what they've gotten themselves into. So a couple of very important things that you need to read. You need to look at your good faith, you need to look at your truth in lending, you need to look at the note, and you need to look at the mortgage and find out what exactly you are signing. And sometimes there are riders, and what that is typically an addendum to the note that says that there can or will not be different adjustments or provisions taken. So I also wanted to point out that if you go to a bank and ask them, or a financial institution or broker, and ask them to forgive part of the loan, understand that they have the right to 1099 that forgiveness. So not everybody does, but they can. And then also workout loans are a good thing to help you without necessarily forgiveness of a certain amount, but maybe a lowering of the interest rate, and maybe extending the term. So there's a lot of options. You just need to talk to your lender.
Thank you. Paul, quick comment?
Just one quick comment. In the mid-2008, the government did allow you to be forgiven for the 1099 from the bank if you do take that loss, or the bank takes that loss. So through 2009, you will not be 1099 for any loss that you incur from the government. That's not saying that your lender won't go after a judgment, but through this year, they are waiving the 1099 to you.
On that too, it wasn't that long ago that before you actually could get a loan, there was actually a class that you had to take. You're going to talk about that. So it's an interesting issue when people actually leave the closing, they really understand what they signed. And I think it's an emotional thing. They're thinking more about the garden that they're getting ready to put in and so forth. And a lot of this stuff kind of goes over the head. So
Right.
critically important to read those.
Okay, Bonnie, if you could tell us what some of the concerns are that your customers are telling you about foreclosures.
I've sold a lot of foreclosures in the last couple of years, and there's different kinds of people out there buying them. We have groups of investors who buy bundles of foreclosures at one time. You know, they have like a blanket loan standing with a lender in, and they will buy several foreclosures at once. Then we have someone who maybe just wants to pick up a house because they're cheap right now, to rent out so that they can have retirement money in the future or something like that. But mostly it's like a first-time buyer. And the first thing that they usually ask me, if they've heard about the stimulus package, is, how do I get my $8,000? And when am I going to get my $8,000? And what do I do to get that? You know, so I walk them through that. It's basically just a form that you file with your income taxes, or if you've already filed, you can file an amended one. Excuse me, this is great allergy weather. Other things that the people that I've worked with have been concerned about is buying a property in as-is condition. You know, what are they going to get into? And even with the foreclosed property, we always highly recommend that they get an inspection, because at least that way they would know what they were getting into. They want to know if they're going to make money in the future, and when is the market going to go way back up? You know, that's an unknown to everybody, you know. We're seeing foreclosures on the rise. It's just an unknown. Sometimes they want to know, well, do I have to pay the back taxes? You know, is the owner going to come and take the house away from me? Well, you know, you don't pay the back taxes. That'll be paid for by the bank. The owner's redemption right is over, the owner has a 6-month redemption period usually, and if they have not reclaimed the house, they don't have any access to it. So those are a lot of the questions that people have been asking me in dealing with foreclosures.
If someone was interested in buying a foreclosed home, what are some of the tips and pitfalls to avoid coming from the realtor's perspective? And a lot of those we've already discussed, so if you could just kind of skim
Well,
through.
fortunately, as Paul mentioned, this is not all gloom and doom. There's some great opportunities out there. I do have a handout out on the front table there. I encourage you to take that with you. It's a quick reference guide for things you need to be aware of. Things like pre-approval, that's a big thing. You need to have proof of the funding, either personal finance or loan, so make sure you have that before making the offer. They won't accept it. Some of the banks, like Wells Fargo and Bank of America, require that you do a pre-approval through them if you're putting an offer on one of their properties. You don't have to get the loan through them, but they want to be the ones to pre-approve you. So pay attention to that, read the listing, make sure you know what the pre-approval requirements are. Again, you do have to have the proof of funds before we can make an offer. Sometimes you have to turn on the utilities yourself. The sellers typically will not pay for anything. So you'll have to put the utilities in your name, turn them on. To do your inspections, you can't do a well inspection or if the water's not on or the electric's not on. So you'll have to incur that cost. So there is some cost involved here that you might not realize. You also have to have your good faith deposit money that sometimes is not refundable if you accept the property as is. So you need to really read the details as to what they have in the listing before you make an offer on a house. Sometimes you have to de-winterize a house. Being up here in Michigan when it's cold, so if you de-winterize it, you also have to pay to re-winterize it after you've done your inspection. So again, that's a good reason to work through a realtor. They're going to know all these requirements and what is required by the seller. Possession can only be given at the time of funding, so you can't get into the house ahead of time. You can make no repairs to the house. Typically, these REO houses, the banks will make no repairs to it. So that's why we encourage doing an inspection, and we'll cover a little bit more on that later. Do that thorough inspection. Also consider boundary lines, especially if you're buying property. The banks or the lenders, whoever owns the house, will not pay for a survey. That could be a substantial cost if there's a lot of land involved. So you need to realize that. Other than that, closing is final. Make sure you look at all the figures. Get your facts in line before you sign those closing papers, because once you do it, you own it. So again, it gets back down to buyer beware. But there are some great opportunities out there, and you should look at everything and make sure you're well aware and educated on what is required before making an offer.
What is a short sale? Is it advantageous, or is this another pitfall that we fall into?
Actually, there's 3 qualifications for a short sale to actually put your house as a short sale. Number one, you in most cases, you have to be behind in your payments, at least 1 month. You also have to, number 2, have a legitimate hardship. And that hardship can be a number of things: loss of job, loss of second job, your spouse got downsized, could be health, could be a divorce, but you do have to have a hardship. And then the final thing is little or no equity in your home. But there are some huge benefits on short selling your home. Number 1, on your FICO score. On a short sale versus a foreclosure is going to drop you probably down to 400 or 500 on a FICO score. On a short sale, you can negotiate with the bank, and in some cases you can get as little as 100 or 150 points knocked off your FICO score. Also in a short sale, traditionally, if you reestablish, you can get a loan within about 3 years to purchase a home again. The nice thing about buying a short sale home, well, actually, again, the benefit of short sale is you're not going through a foreclosure. Your name hopefully doesn't go into the paper as your house being foreclosed on. And when you're selling the short sale, it's becoming more and more, you're seeing more short sales out there because it is just a cleaner way of selling a home. But the real benefits is a lot of times in a short sale you bring 0 to closing. Generally, the debt is forgiven. So there is no judgment by the bank to come after you. And of course, if you get the right realtor to make sure and ensure that, that's very important. So you don't want to deal with just anyone. you want to deal with somebody that's experienced in short sale. The national average for success in short sales is 10%. BJ is certified and gone through the training, and he's affiliated himself with a short sale specialist, and their success rate is 79%. So it's huge, and I would encourage that. The other thing is, the people that short sell their home usually stay in their home. So they're not being evicted, they're staying in their home, and again, it sells as is, and the price is reduced because the debt has nothing to do with the house at this point. The other thing I like about short sales is the seller is actually on your side. They want the house to show well, they want the house to be in great shape, they want the buyer to come in, they don't have any animosity towards the bank, whereas with an REO, sometimes they're mad at their lender, sometimes they're mad at that bank. And when you go in there, it's not uncommon for them to have taken the furnace, the air conditioning unit, the water softener, and sold it or taken it with them. It's not uncommon to have holes in the walls, whereas a short sale, traditionally, the condition of the home is much, much greater. So there's a benefit both as a buyer and a seller to go short sale. And of course, the other thing that we like with BJ and the team that he works with is your information and what goes on is very confidential.
Or if we are going to do everything that we can to keep you in your home if financially it makes sense. If we can't keep you in your home, we want to do the best thing for you and also for us. So absolutely, when I said we were going to find a way to try to help and make it work, and there's other options. I don't want to steal your thunder, but yes, there's a lot of other options.
And as a follow-up to that, banks are more readily willing to do a short sale because on a national average, they lose less money in a short sale than they would going through a foreclosure.
Okay, let's move on to Yvonne. I thank everybody else. Yvonne, you've been very, very patient. One thing I noticed is we all know Neighborhood Inc. of Battle Creek exists, but I don't know that anybody really knows what they do over there. So I've asked Yvonne to come over here and explain to us what Neighborhood Inc. is about and what they can, information they can provide to help out in foreclosure situations. So Yvonne, thank you.
Thank you. I think there's people are looking at Neighborhoods Incorporated probably in the past and what you think it did and what we did before, and we still do some of those things, but we are so much more. Actually, I consider everyone here on the panel one of my partners, and actually I am a resource that hopefully you need to be using for this community. Neighborhoods Incorporated, we are a national affiliate of NeighborWorks America. We are also a HUD certified counseling office, are also MISHTA certified in counseling. What does that mean? People think that we're a low income agency. No, we are not. In the past, Neighborhoods has done loans, and we still do some loans. But you need to know that we provide counseling to anyone in the city, in the county, in the state. In our foreclosure counseling piece, we counsel people from all over the state of Michigan, and these services are free. Let me reiterate that. These services are free. What happens to a lot of customers if you are behind or someone you know is behind on their mortgage? Number one, sometimes we have the local banks and affiliates here are great, but if you're working with a national company, sometimes there's a lot of frustration because you cannot get to them. What we do is we negotiate and we mitigate with that lender or servicer for you and with you. We work on a crisis budget. We look at what's going on with you. We help with the process. We also are familiar with all of the new laws, the other things that are going on. Who is the investor? We talk about who's the investor on your loan to know what can happen. So if you're having a hardship, what they can do for you. So these are the things that we do, and we work with anyone all over the state because we do a lot of things on the phone, over the internet, and face-to-face so that you can come in. It is free. And let me say again, people do not need to pay for this service. We have customers saying that I had given someone $1,000, $2,000 to do this for me. They should not be doing that. This is all free. We are obligated to do this. We receive money from the federal government, from Congress, we are doing this for free, and we work with anyone and everyone that we can. Now, we make no promises to do something that cannot be done. Number one, we find out what's going on. We work with your lender, with your servicer, with the realtors, because we have some people that need to do a short sale or pre-foreclosure sale. We need to refer them to honest and legitimate people in the area. So number one, that service is there. If it's not you, someone in your family, someone knows what's going on. Now, in the education piece, we provide homebuyer education. Homebuyer education takes you from the beginning through looking at the documents. In that last class, we go over the mortgage, the deed, the truth in lending, everything that you will sign before you go to closing. We go over every document so you know what it looks like. A person is familiar with those documents. We also, if someone is going to, if they have a good faith estimate and they're going to do their documents, we encourage them just to bring your documents in, and our lender will take a look at it and go over it with you. We talk about knowing what you have, knowing what you sign, because the other part is there's so many people that come and say, I think I have this, and they really don't have that. So we talk about that. Homebuyer education is also free. We do financial literacy. If someone is coming, and I encourage even the realtors and the bank, someone that says they want to purchase a home and maybe there are a few credit issues, refer them. We will work with them so that they can improve that, repair that, and get on track so that they can purchase a house. So we are probably one of the best kept secrets, which we don't want to be a secret anymore in Battle Creek. Last year, we counseled over 500 and some people who were going into foreclosure. So we do a lot of work over there. And they're from all over the state. So we find that you are our partners, and we appreciate all the work that you do. So we want to be able to help you and help Battle Creek. Because we also look at the paper, we get the Homer, is it a Homer Advisor? Okay, and we look through and see all Homer Index, all the foreclosures that are going on, and check and see, is there anybody that we've been working with that we see that's going into foreclosure? Because sometimes people don't really know a lot of the information. And we encourage, number one, them to look at it, be upfront, talk with your lender, talk with your servicer, and we work on behalf. Now, we also help people come to the realization, if it's not going to work, if it's just not, what's the next step? So if the next step is I need to sell my property, I need to do something else. So we are concerned with Battle Creek. We live in a community. This is our Battle Creek, everyone that's here. So we certainly want things to be successful. So I consider everyone here my partner.
As a testimonial to Yvonne, in Neighborhood Zinc, I got a call from her a couple of months ago, and a client that had a home in foreclosure received a letter from a lender telling them that they needed to be evicted and move out of their home. It didn't conform with the state laws. They were wrong in what they were implying to the person. Yvonne contacted me because an asset management company had listed it through us. We not only contacted the asset management company, but we also contacted Mark Schauer, gave him a copy of the letter, so that company doesn't try to pull that in this state any longer. So she does do what she says, and we are more than welcome to help her in any way.
Thank you. That works.
Oh, I'm so glad that we partnered with you and provide information in our relocation packages. Thank you for sharing that information. We have 5 minutes, and I will take a couple of questions from the floor, and then if you have any more questions, please write them down. I will get with each of the panel members and ask them to respond in writing to me so that I can put it in a fact sheet, and I will also take the rest of my questions and have them elaborate on them behind the scenes here, and then we'll get those put out there as well. So, first question, anyone? Cindy?
There's a lot of websites out there that are offering, to buy homes out of state, like if you're looking for a retirement home. I guess my concern is, how do you verify the property, and how do you make sure that it's a legitimate?
Then my advice would be go through a realtor. Get a realtor that you trust. They can easily investigate that and find out if it's legitimate. Work with someone local.
Local meaning in the state?
In Battle Creek.
Oh,
Someone who you trust.
I don't know if this would be feasible or how the logistics of it would work, but if you already own a home or already have your first home, so to speak, and you're still wanting to possibly qualify for the first home tax credit, is it possible to put the mortgage of that home into a child's name to qualify for that tax credit?
No, because you can't have owned a home in the previous 3 years. So even if you transfer it, you'd have to wait 3 years before you'd be eligible.
And I would be careful, because if they did investigate, you don't want to be liable for scamming the system.
Right.
Be very careful.
That's the federal government, you guys.
Yeah.
But the new mortgage title can't, it wouldn't be in your name, so to speak, it would be into a child's name.
Oh, that's, as long as they're of 18 years of age.
They qualify.
Absolutely, and you can procure the mortgage, absolutely, they're qualified.
Why is it so difficult to contact the mortgage holders that are listed in the Homer Index, since you brought that up?
Yeah, we have a great newspaper that has all of the things. A lot of those lenders are available either by mail or by phone in many cases, but they also have business hours at their choosing, and they also, a lot of times you get a busy signal when you call in there. It is difficult. You're not the only one having the same problems on that. Dealing with those typically attorneys are who you're actually dealing with at that point, not banks, are challenging at best, and they've heard all the stories, and they are very quick to review your messages and decide whether they delete it or not. And so I don't know the answer to that other than you're not alone on that whole issue.
Once the sheriff's sale has been completed, the home is now it's foreclosed on, and there's just a redemption period. That redemption period is between 6 months and 12 months. In the past, if it was over 3 acres, it was a 12-month redemption period. They've changed that now, so you have to look at the foreclosure in the index and see how long that redemption period is. But the problem is, once the sheriff's sale is done, normally the bank has sent that over to what's called an asset management company. Even if you were to contact the bank, they wouldn't know anything about it because the lawyers in the asset management company are handling that loan, and they're the ones that are in the foreclosure process. So different banks use different asset management companies, but really, after that sheriff's sale, even if you got a hold of the bank, they probably wouldn't be able to articulate anything to you anyway.
I wondered why the banks don't verify FICO scores and make sure consumers can afford payments.
What has happened in the past that maybe you're referring to is that they've used people's FICO scores and have done no income, no asset. If you have an 800 FICO score, which is a very high credit rating, basically they say you've had a good history, a good track run, you've made all of your payments before, we're going to take your word for the fact that you can afford this house. That's a no doc loan. That's what had been happening. But if you lose both of your incomes, or you are self-employed but have that high of a FICO score, a lot of components kind of go into that. But I think ultimately the reason for doing those was that we wanted to get, some people can't qualify based on debt to income ratio because they write off everything, small business owners particularly, you can't have it both ways. But they made those, typically had those loans to help people get into houses that had a hard time proving income. So it wasn't necessarily us going out there trying to find people just to put in houses. We were trying to help people get houses that had good credit.
This question is to the whole panel. We always talk about the 1-year credit that they have for this year, right? Have you as a panel went to Congress or the President about extending this for at least 3 more years?
We have lobbyists that are addressing that. He wanted to know if they could extend that. So the National Board of Realtor is addressing that. We have lobbyists in Washington right now who are trying real hard to get that extended, and I wouldn't be surprised if that happens. And you can help by contacting your congressman and suggesting that.
Thank you, everybody, for attending. If you could go to ICE and put your comments in there for us, go to MWR website to see the the video later on and the fact sheet. We'd appreciate it. And again, we thank the panel for coming. We appreciate your time and effort. Thank you, everybody.